Well, we've got, speaking of the Dow, we have Dow here. Turning to one Dow name that we're watching. Its shares are up roughly 15% in the past year. It's been a quiet move. Company saying it sees strong demand in a number of sectors and signs of recovery. This is most important in China. I am thrilled to have us join right now. I'll post on their big analyst day is Dow Chair and CEO Jim Fitterling. Jim, always good to see you.
Great to see you, Jim. Carl, good to see you as well.
You know, Jim, I noticed you have such a mosaic of things that are going right, whether it be organic products that you've come up with, just new ideas, countries where you're selling more in. But, you know, I've got to come back to something that people don't understand. You are still linked to oil. And when oil goes up, Jim, it doesn't seem to matter that you've come up with carbon-free. People say, oh, oil up, let's go buy Dow.
Well, it helps. Energy is a big part of our mix and what we do. And so when energy moves up, obviously, that creates the clearing price for our products. But natural gas is what gives us our advantage. And 65% of our investments are in really advantaged territories like the Americas, right. And we're making big investments in Canada and then hope to come back here in the U.S. and do the same. So we're continuing to make investments here to take advantage of this energy advantage that America has.
Well, the energy advantage should make it so that Asia is doing well, and it looks like Asia is doing pretty well.
It is. I would say has the same slow spots as America does with housing and construction right now. But I would say the consumer economy is holding up relatively well. Electric vehicles, obviously, very strong. Solar has been very strong. And obviously, a lot of that material has ended up coming here. And we see that. We have large customers in all those markets. I think what we're starting to see in the global economy is with all of the infrastructure that needs to be built, whether it's investment in the existing electric grids and the infrastructure to support our own energy needs, or the new energy demands that's coming from AI and data centers, this infrastructure spend is happening. And I think the last 5 years, we've been focused primarily on getting our house in order, getting the balance sheet right. And today we're going to tell investors, look, we've ticked the box on everything we said we'd do for the last 5 years and focus forward till 2030 on the investments that we're going to make to generate another $3.5 billion of underlying earnings for investors, which will allow us to not only return share to them through dividends, right. You know, pay them through dividends and share buybacks, but top and bottom line growth. Last 5 years, we had to put a lot of money towards credit profile and debt reduction and get the balance sheet right. It's the strongest it's ever been at this point in the cycle, and the cycle's starting to turn, and our investments are timed well to capture the upside of the cycle. If you go from where we are to mid-cycle or to peak earnings, next peak, you're talking about 10 to 16% compound average growth rates from here, and it feels like it's starting to turn.
You mentioned some of these projections on power demand over the next 5 to 10 years. Do you consider it a potential crisis, or is there so much attention and investment being planned now that you think we'll skate to where that puck's going?
I don't think it's a need for sure. It's an opportunity, a big opportunity for us. It requires safe, reliable, and dispatchable power. It's not going to be done by wind and solar. Wind and solar are going to have a place in the economy, but we're a huge energy user. We generate 10 gigawatts of power, so we're on the scale of a utility. And some of the individual tech companies are talking about 30 gigawatt needs. To give you an example, you know, we're challenged to decarbonize and grow the company. And now we got to also figure out how to service this. So they're going to find ways through energy efficiency for data center cooling. But we're working on a project with X Energy on small modular reactors. And some tech companies want to talk to us about why we think that's going to be the winning technology. And does that play a role in how they're going to supply data centers with power? You're going to see combined cycle natural gas with amine scrubbing. And we do a lot of the work with the amines to scrub that. That's going to be a reliable source of power. And then where you've got the ability to have carbon capture, like in the Gulf Coast, you're going to see blue hydrogen and carbon capture. Those are your three most cost-effective and reliable dispatchable power, and that's going to be what fills that need.